Every time there is a direct customer, Jack will receive a 15% commission added to his account. And this is Leo. Leo is a sub-affiliate partner of Jack, level 1 partner of Jack. And this is Eric. Eric is a sub-affiliate partner of Leo as well as level 2 partner of Jack. After finding some sub-affiliate partners, Jack will receive commission from Leo and Eric. After Leo gets new customers and receives commission, Jack will also get 10% on the amount of commission Leo receives. After Eric gets new customers and receives commission, Jack will also get 1% on the amount of commission Eric receives. Thanks to the system of multi-level commission, Jack will always receive a great deal of commission every time AP subs successfully attract new customers. WeCopyTrade, the only platform that pays passive commissions at 3 levels to affiliate partners.
WeCopyTrade.
John always wanted to invest, but because he works full-time at the office, he never found enough time to learn how to do it. He missed out on investing in Amazon. He missed out on investing in Bitcoin and gold.
Because he didn't understand the market. But now, he started trading because he found WeCopyTrade.
It is a social network for traders that allows him to skip the years of learning the financial market and copy the most successful investors. He checks top profiles to see their success rates, returns, and risk assessment, and then he chooses to copy. It automatically mirrors all of their investments. So if they get a 10% return, he gains a 10% return as well. Investment news will be updated and shared on the traders community and social network so that he can keep track of all the market information.
WeCopyTrade.
At WeCopy FinTech Inc., we are proud to be one of the leading companies in the field of marketing and technology. Established in 2024, our mission is to provide breakthrough marketing and technology solutions, helping customers improve business efficiency and reach their target audience in the most effective way. Our motto is quick, economical, and efficient. We provide a wide range of services from UI/UX design, web development, mobile development to IT outsourcing. We are proud to have cooperated with hundreds of customers globally, bringing remarkable success to their projects. Let WeCopy FinTech Inc. make a difference for you. Contact us today.
WeCopyTrade.
Are you struggling with trading in the financial markets? Losing money as well as losing sleep every night because you don't have the time for research to keep yourself updated? The lack of experience and knowledge is the reason for your poor performance. Don't worry. I might be able to help you.
How? And who are you?
They call me WeCopyTrade. Now let me introduce you to John and his friends. They are all professional traders. They spend years trading, investing, and researching the market.
Okay, so how can you help me?
With my help, you can now connect to John and his friends and copy all their strategies.
Oh, how will this work exactly?
Oh, it's very simple. You just begin to follow John or any trader that you trust. If that trader opens a trade, that same trade will be opened in your account. And if that trade makes a profit, yours will too.
But I want to remind you that I don't have the time and experience.
You don't need to have any experience to copy trade. You can spend your time doing your favorite activities while John and his friends are doing all the work for you. You can manage your risk and view your trading records anywhere on your laptop or mobile device.
This is amazing. How do I start?
You can start by opening an account with WeCopyTrade. WeCopyTrade is a platform that allows you to connect and copy the top successful traders. WeCopyTrade makes sure all your trading transactions are fair. WeCopyTrade will ensure that you can enjoy life and not worry about making big trading decisions yourself. If that sounds good to you, what are you waiting for? Start copy trading with WeCopyTrade now. Past performance does not guarantee future results. Trade responsibly.
Welcome back with WeMasterTrade fam. It's your boy Aiden here, and I'm on the side to be with you today for another incredible live session Whether you've been with us for a while or this is your first time joining, buckle up because we've got a jam-packed section full of insights, strategies and the kind of tips that will take your trading game to a whole new level. So who's ready to crush it today? So let's get some love in the chat, drop your favorite emoji, hit that like button and let me see where you're tuning in from. So whether it's New York, Tokyo or London or anywhere in between, we want to hear from you. WeMasterTrade community is global and today we're all in it together. And hey, if you're not subscribed yet, you know what to do. Smash the subscribe button and stay in the loop for all of the tips and the tricks that will help you level up. Alright, so I'm loving the energy already. We've got traders tuning in from all over the world and it's awesome to see that everyone's coming to share, learn and grow. So let's keep that momentum going because today's session, it's going to be next level because we've got some special guests here who are here to share their stories and strategies. I'll help them rise to the top of their game. So trust me, you don't want to miss a single word. First up, I have the honor of introducing Raf, an absolute beast in the Forex market. So Raf has been mastering Forex trading for over a year and a half and he's here to share some seriously valuable insights with all of you. Raf, so how's it going today?
Hey Alan, I'm feeling fantastic and thrilled to be here. It's always wonderful to engage with WeMasterTrade community and discuss the successful approaches I recently adopted. I'm eager to delve into some of the strategies I've been applying in the Forex markets.
That's what we love to hear. So for everyone watching, make sure that you've got your notepad ready because Raf and Helen are about to drop some serious knowledge. So Helen, how's it going?
Hey Aiden, I'm open to be here as well. There's always something new to talk about in this session. And today I'm excited to share some strategies that have been working for me in fund trading. It's going to be fun one.
So we'll be delving deep into their experiences, challenges and the strategies that will help them thrive in the fast-paced world of trading. Okay, so Raf, let's kick things up with you. You've been trading Forex for over a year and a half now, and I know that the Forex market can be a bit of a roller coaster. So can you tell us how you got your start in Forex trading and what led you to, choose WeMasterTrade as your platform?
Certainly, Adam. I began Forex trading about over a year ago. What captivated me initially was the market's vibrancy and perpetual activity. The Forex market is exceptionally dynamic and I was attracted to the concept that there is always potential for success regardless of the circumstances. When I first discovered WeMasterTrade, it immediately resonated with me as a perfect match. And the resources they provide, including sophisticated technical analysis and access to real-time data, truly impressed me. However, it was the community aspect that clinched to me. WeMasterTrade places a strong emphasis on aiding trader success by offering essential tools and support to advance regardless of your trading experience.
That's fantastic, Grab. It sounds like WeMasterTrade has really helped you evaluate your game. Now, Forex is known for its volatility, and sometimes that can make or break a trader. So how do you handle the ups and downs of the market without, letting the pressure get to you?
Well, great question. Volatility can be challenging, but it's also where the real opportunities are. The key is having a solid risk management plan. I always say you have to respect the risk. It's important to stay disciplined, and WeMasterTrade risk management tools help me to do that. Their real-time alerts and customizable risk parameters allow me to react quickly, but with control. When the market moves fast, you have to stay calm, trust your strategy, and not let emotion take over. And for me, that was WeMasterTrade feature really shine.
So that is some seriously valuable insights, Raf. Managing risk and staying cool under pressure is definitely key in Forex trading. Now, Helen, let's switch gears to fund trading. You've been crushing it for nearly 2 years, specializing in long-term strategy. So can you tell us what drew you to fund trading and how it differs from other forms of trading?
Actually, Aiden, fund trading is all about strategy, long-term growth. It's not about chasing quick wins, but building a portfolio that can grow steadily over time. What really sets fund trading apart is that you have to think both short-term and long-term. You need to manage risks carefully while keeping an eye up for opportunities that arise. WeMasterTrade real-time data and analyzer tool has been essential for that balance. They help me make informed decisions that are aligned with my long-term strategy, even when the market rolls surprise my way.
I love that. Fund trading seems like it requires a lot of patience and foresight. So, Helen, how do you stay focused on the bigger picture, especially when the market gets, rocky?
Pension is everything in fund trading. The market will always have its up and down, but you can't let short-term fluctuation decay your long-term strategy. One of the biggest lessons I have learned is to stay emotionally neutral. Don't get too excited when the things are going well, and don't panic when the market dips. WeMasterTrade risk management tool help me stay disciplined even when things get violent. Set a precise risk parameter and have a peace of mind knowing that I'm not overexposed even when the market is acting unpredictably.
So that's really such a solid advice. So keeping your emotion in check is definitely key. It's a really big part of successful trading. So you both have shared some serious gems so far, but let's talk about the tools that actually help them you get to where you are today. So Raf, can you share one specific features on WeMasterTrade that has been like a game changer for you and Forex?
Definitely. A tool I absolutely rely on is the account insight features. It offers up to the minute data on how my account is performing, and I use it to observe patterns, evaluate my trades, and make better informed choices. Whether I'm pinpointing the best time to enter the market or deciphering my market trends, this tool gives me an edge. It has enabled me to spot opportunities that I might not have noticed otherwise.
So that sounds like a total game changer. Having the real-time insights is definitely crucial, especially when you have to make quick decisions. So, Helen, how about you? What has been your go-to tool in fund trading?
For me, it's all about the risk management tool. They allow me to customize the amount of risk I'm willing to take on any trade. It has been key for me. For market like crypto, WeMasterTrade help me stay disciplined and in control, ensuring that I never take on more risk than I'm comfortable with.
Risk management is so important, especially in today's fast-moving market. Whether you're in Forex or fund trading, having the right tools makes a world of difference. So I hope that everyone's watching, taking notes, because Rav and Helen are dropping some serious pot-level insight today. Alright, so traders, we're kicking things up a notch because it's time to dive into one of the most important features here at WeMasterTrade, the package comparison. So whether you are a fresh paid newbie eager to get your feet wet, or a seasoned pro looking to scale your strategy to new highs, this segment is for you, because this is where you find the perfect trading package to match your goals and take your trading from good to great. Okay, so now let's be clear. Here at WeMasterTrade, we know that there's no one-size-fits-all in trading. Every trader is unique, with different styles, risk tolerance, and strategies. So that's why we offer multiple customizable packages to meet you exactly where you are in your trading journey. Whether you're aiming for high risk and high rewards, or you prefer the steady, methodical approach, there's something here for you. And to break it down, I've got the awesome Raf and Helen, two of WeMasterTrade Finance, and they both worked closely with these packages and are here to give us the inside scoop on how to leverage each one to its fullest potential. So let's jump in. Raf, you've been with WeMasterTrade for a while now, and you've seen firsthand how these packages can evaluate a trader experience. So can you kick things up by walking us through how both new and experienced traders can benefit from the package comparisons and why it is such a game-changing feature in the WeMasterTrade experience.
Hey Adam, I really enjoy this. If your trader can fully customize their experience, the package comparison feature simplifies the process for a trader to understand precisely what they are getting. And when you visit the website, there's a detailed comparative overview of each package that includes information like the initial balance, the profit target, daily loss limits, and more. All the essential data details are presented in a straightforward, easy to navigate table. It's on structure to assist traders in selecting the best tool for their success. Well, let's talk about the first one, the standard package, one of the most popular options. This one is great for traders who got some experience and are ready to level up. You start with an initial balance of up to $200,000, which gives you plenty of room to trade confidently and make strategic moves. The profit target is set at 6%, which is perfect for traders aiming for steady, sustainable growth. And the daily loss cap is 4%, so you got enough breathing room to ride out market swing without stretching too much. It's an awesome balance between opportunity and security.
So that sounds like a perfect stepping stone for traders looking to level up without jamming into deep or too quickly. A 200,000K balance and a solid 6% profit target gives you a ton of flexibility to build momentum. But for those who are looking for something a bit more thrilling, let's talk about the 5-10-10 package wrap. I think that this one is a favorite for high-risk, high-reward traders, and what makes the 5-10-10 is such a standout.
The 5-10-10 package, right? Well, now we're talking big plays like the standard package. You start with $200,000, but this package is for those traders who are ready to take on bigger risks for bigger rewards. The daily loss cap is 5%, giving you more flexibility in how you handle the market. But here's the kicker, the profit target jumps to 10%. This is perfect for traders who have confidence in their strategies and are looking to make those major gains. It's all about having a higher tolerance for risk in exchange for bigger payouts.
Now that was what I'm talking about, a 5% loss cap and a 10% profit target. That's definitely for traders who aren't afraid to go big and swing for the fences. But what if someone looking for something more relaxed? Maybe they want something simpler without all the pressures of hitting specific profit targets. So Alan, I heard that there's a 5-10-0 package. So can you break it down for us?
Okay, then 5-10 euro package is ideal for traders who want a straightforward, no nonsense approach. You start with a $100,000 balance, but here the cool part, there's no profit target. You can trade freely without the stress of hitting specific percentages. It trusts you, the market, and your strategies. The daily loss cap stay at 5%, give you some structure, but the beauty here is that it allows traders to focus on consistency without worrying about the specific goals.
So that sounds like a dream for traders who just want to trade without all the restrictions. Total freedom, no pressure, just you and the market. Now, Alan, what about those traders who want a bit more control over the risk management but still want to play in that high stakes arena? So what can you tell us about the 5-10-10 no PC package?
The 5-10-10 no PC package is perfect for the trader who want more control over their trades. You still get the $200,000 start balance and the 5% daily lot cap. The flexibility is the real selling point here. This package allows you to track and adjust your trading parameters to match your style and risk management preferences. Whether you're reacting to market trends or want to experiment with different strategies, this package gives you the freedom to adapt without losing the steady net of risk management.
So flexibility and control in a volatile market, that's huge. And I love how these packages are giving traders more ways to adapt and grow. Now, we've covered a lot, but I've been hearing about Whisper, about something really special, the custom package. So, Rap, tell us, what makes this one so exciting?
Okay, the custom package is where things get really exciting. This is for the trader who wants it on, the full control, the full customization, and a massive starting balance. You get a jaw-dropping up to 1 million initial balance, and yes, you heard it right, $1 million. But that's just the beginning. The real beauty is that you can customize everything, the daily loss limit, the overall loss limit, and even your profit target. It's perfect for traders who know exactly what they are doing and want to craft a trading experience that matches their exact needs in the ultimate in freedom and control.
$1 million starting balance and the ability to customize your entire trading experience, that's definitely next level trading. And whether you are a risk taker or a methodical trader, the custom package sounds like the ultimate playground for those who want to take their trading game to the stratosphere. Okay, traders, so let's quickly recap whether you've just started, with the standard package, going big on rewards with the 5-10-10 package, or enjoy full freedom with the 5-10-0, or you can choose to take control with the 5-10-10 no PC, or choose to customize everything with the custom package. I believe that WeMasterTrade has the perfect option for you, and the only question left is which one is calling your name. And head over to the package comparison section on our website right now and check it out for yourself. We've got packages designed to fit every trader, no matter where you are in your trading journey. Let us know in the chat which package fits for you, and our team is ready to help you get started. The future of trading is in your hands, so let's make it happen. So this is where the magics happen. We'll talk about the packages and how you can jumpstart your trading journey with WeMasterTrade. But let's be real, success in trading isn't just about the package that you choose, it's also about understanding and sticking to the rules. So the conditions we have set here, WeMasterTrade, are designed to not only keep you safe but also help you grow and take your strategies to the next level. Now, whether you're just getting started or you've been trading with us for years, these conditions will act as your roadmap. So let's dive into the rules that define our trading environment, because if you understand the rules, you can master the games. And first on the list, and arguably one of the most important, is the daily loss limit. So after you've been through it all, the highs, the lows, so can you kick things up by explaining to everyone how this daily loss limit works and why it's so crucial for managing risk?
Absolutely, Aiden. And the daily loss limit is one of the most essential protection any trader can employ. It serves as a daily circuit breaker to prevent you from suffering significant losses on a challenging day. The concept is straightforward. There's a limit to how much you can lose in a single day of trading, and it's determined by the greater of true values, your account balance and your equity at the beginning of the day. So let me break it down with an example so everyone can understand it clearly. For the first example, let's say you got a balance of $105,000, but due to some open trades, your equity, which include floating profits and loss, is $107,000 at the start of the day. If you are working with a 4% daily loss limit, that means you can lose up to $4,000. If your equity falls below $103,000, you are done trading for the day. And for the second example, on the flip side, if your balance is $100,000 and your equity is $99,000, the same 4% loss limit would mean your account would be liquidated if your equity dips below $96,000. The point is that daily loss limit is there to make sure a bad day doesn't wipe you out completely. It's about protecting your account and giving you the chance to regroup and come back stronger in the next day.
It's like an insurance policy for your trading day. You hit that limit and boom, you're out before things get out of hand. But what happens if a trader accidentally, can they keep trading?
Well, that's a great question, Aiden. And no, if you breach the daily loss limit, your account is automatically liquidated, and on your open position will be closed and you won't be able to trade again until the next day or unless you buy a new trading package. So here's the thing, this liquidation is automatic and immediate. It's designed that way to prevent further losses, but here's a word of caution. Market fluctuation can sometimes cause you to lose a bit more than the limit, depending on how fast the market is moving.
Oh, so it's a hard stop, definitely something traders should keep an eye on to avoid. Now that we understand what the daily loss limit is and what happens when it hits, the next thing is how to avoid hitting that limit in the first place. So, Helen, you've been in the trading trenches for years, so can you share some practical strategies that traders can use to stay within their daily loss limit? We're all ears.
You got it, Aiden. Staying within the daily loss limits is all about being disciplined and follow the solid risk management plan. Here are few key strategies that have worked wonder for me and outlet or the trader. The first, and I can stress this enough, overuse a stop loss. I know it sounds simple, but it's absolutely critical. The stop loss ensures that if the market moves against you, you're out of the trade before the thing gets out of hand. Think of it as your safety net.
So that's like setting up guardrails on a mountain road, eh? It's to stop you before you go off the cliff.
Exactly, Aiden. It's a trial layer operation. Now, the second strategy is position sizing. This is where a lot of traders slip up. You should never risk too much on a single trade. A good rule of thumb is to risk no more than from 1 to 2% of your account balance per trade. This way, even if the trade doesn't go your way, you still fast from hitting your daily loss limit and you can keep trading without any major setback.
So it's like building a defense. You don't put everything in one basket, right? You spread out the risk. Makes sense. But what happens when those moments when trader feels empty days after the losses, trying to get it all back in one trade?
That's a big one. Chasing losses is one of the biggest mistakes traders make, especially newer ones. That brings me to my third strategy: don't chase losses. If you're having a tough day, take a step back. The market will always be there tomorrow. If you start trading losses, trying to recover too quickly, it's easier to make emotional decisions that lead to even bigger losses. And before you know it, you hit the daily loss limit and you're out for the day.
So true, it's like trying to sprint when you already win it, you're more likely to make a mistake. Now, all of these strategies sound spot on, but how do traders stay mentally strong when the things aren't going their way? What keeps them falling into that emotional trap of facing losses?
It's all about mindset, Aiden. Trading is just a mental game that is a number game. You got to stay calm and focused. One trick is to always have a trading plan before you even play a trade. That's why when the thing gets tough, you stick to the plan and avoid making impulsive moves. And if you find yourself getting emotional, just start. Take breaks, step away from the screen and reset your mindset.
Thank you, Helen, for those incredible tips on managing daily loss. Now, let's shift our focus to another critical element of risk management, the maximum loss limit. So this limit is a long-term safety net, ensuring that you don't deplete your account over time. Unlike the daily loss limit, which resets at the end of each day, the maximum loss limit is cumulative, so when you reach it, your account will be locked and your trades will be closed. So to dive deeper into this, let's discuss how the maximum loss limit works, how it's calculated, and why it's essential for traders at every level. Whether you're a new trader looking to minimize risk or an experienced trader, telling your strategy, this limits ensure that you don't go beyond a point of no return. So, Ralph, I know that you've got some great insight into the mechanics of the maximum loss limit. So, could you walk us through how this rule works and what traders need to keep in mind as they plan their trading strategies?
course, Alan, the maximum loss limit is a vital rule that's often overlooked but extremely important. Essentially, it's there to prevent traders from experiencing catastrophic losses by capping how much you can lose across the life of your trading account. So let's break it down. The maximum loss limit ensures your account equity and never falls below 94% of its initial balance. So if you start with a balance of $50,000, your account will be closed once your equity falls below $47,000. That's a total allowable loss of $3,000. However, it's not on bad news. If you start making profits, the limit adapts, giving you more breathing room as your equity grows. And for example, if your account balance increases to $52,000, you now make $2,000 in profits, and your new maximum loss limit would then allow you to lose up to $5,000. And as you're essentially locked in those gains, the maximum loss limit acts as a long-term safeguard. It's designed not only to protect your account, but also to encourage disciplined trading by setting boundaries. And the goal is to ensure you don't dig yourself into a hole that's too deep to recover from. And here are a few specific examples. And the first case, let's say your account balance let's say $50,000. But your equity drops to $49,000 due to some market losses, and you are allowed to lose another $2,000 before your account hits that critical $47,000 threshold and automatically liquidated. And for the next case, the second one, now if you are doing well and your equity rises to $51,000, you got some extra cushion, and at this point you are allowed to lose up to $4,000 before your account hits the same $47,000 limit. So for the calculation, to figure out where you stand, the maximum loss limit is calculated by adding the sum of your closed positions and factoring in any open positions that are still running. Your trading dashboard will show two key metrics: the max permitted loss, which is how much you are allowed to lose overall, and the remaining loss, which is the loss left before your account is closed. So now what happens if you hit the limit? Well, unfortunately, if your equity hits the maximum loss limit, the system will automatically close your account for the day, and your open position will be liquidated, whether they are profitable or not, and you'll be unable to trade for the rest of the day. And to resume trading, you would need to purchase a new packet.
So thanks, Ralph. That definitely helped clarify the nuts and bolts of the maximum loss limit. It's kind of like a safety buffer, isn't it? It's there to keep you from spiraling out of control, especially when markets get volatile. Now, I imagine these rules impact different traders in different ways. Whether you're a cautious trader looking, to keep their risk low, or a more aggressive trader trying to maximize profit, this limit is one of those things you can't afford to ignore. Let's bring in Helen, our risk management expert. So Helen, what do you think are the most important, most common mistakes all trader makes when it comes to, managing their maximum? More importantly, what strategies can traders implement to ensure that they never get too close to it?
Great question, Aiden. You're absolutely right. No matter what type of trader you are, ignoring the maximum loss limit can be costly. In fact, it's one of those things that sneak up on traders who aren't paying attention to the long-term picture. And as a more common mistake is underestimating how quickly cumulative losses can add up over multiple trades. Here are some key strategies I recommend to stay well within your maximum loss limit. The first, set stop loss order on every trade. This is your first line of defense. Setting a stop loss means you're deciding in advance how much you are willing to lose on a particular trade. The system will automatically close your trade if it hits that number, which protects you from letting a losing trade without a plan. For example, if you only willing to lose $500 on a particular trade, you set that at your stop loss and you won't have to worry about the spiraling.
Well, I love that it's like putting a safety belt on each trade. Once you look at that double, it's out of your hand.
Exactly, Aiden, is all about the deep settling. The next, manage your position sizing. This is a big one. Often, traders, especially new one, get carried away by putting too much capital into a single trade. But when you risk too much, you also risk losing a large percentage of your account if the trade goes south. A good rule of thumb is the risk no more than 1 to 2% of your total account balance on any single trade. For example, if your account balance is $50,000, you should only risk from 500 to 1,000 per trade. This keeps your potential losses manageable and well within your limits.
That makes total sense. You're not putting all your eggs in one basket, and it gives you more room to beat that.
Exactly. It's all about spreading the risk, so you don't take too big of a hit of any one trade. To monitor your account equity regularly. This may sound basic, but incredibly important to keep an eye on your account equity throughout the day. It's easy to get caught up in the market high and low. You should always to be aware of how close you are to your maximum loss limit. Your dashboard makes it easy to check your remaining loss. So use. If you see that you're getting close to the limit, it's time to take a step back and reevaluate your strategy.
It's like watching your field guys, and you don't want to be trying on fields without knowing it.
Exactly, and no one wants to get stuck on the side of the road or to the neck. Create and stick to a trading plan. Having a well throughout trading plan is one of the most powerful tools in a trader arsenal. This plan shall outline not only your profits goal but also your risk management rule. For example, if you have a few losing trades in a row, though your plan tells you to take a break, reset, or change your strategy, the idea is to have a preset series of rules so you don't make impulsive decision in the heat of moment.
It's like having a roadmap, and you know where you're going, and you have to continuously plan for when things don't go as expected.
Exactly, the market can be unpredictable, but a solid plan keeps you grounded. Generic regularly review and adjust your strategy. Even the best laid plan needs to be reviewed and tweaked from time to time. If you find that you're approaching your maximum loss limit too often, it may be a sign that your risk management strategy just adjusting. Maybe you need to tighten your stop loss or reduce your trade size. The key to stay flexible and adapt to changing market conditions while always keeping your risk in check.
So that's great advice, Alan. It's all about constant improvement, and you can't just start it and forget about it. You have to be ready to adjust based on your results in the market.
Actually, trading is dynamic and your strategy should be too.
So thank you for the fantastic breakdown of the maximum loss limit, Ralph and Helen. So next we're going to under a short break, and after that we're going to continue with the promotion plans that we're currently running and cover some of today's economic calendars.
WeMasterTrade.
Are you struggling with trading in the financial markets? Losing money as well as losing sleep every night because you don't have the time for research to keep yourself updated. The lack of experience and knowledge is the reason for your poor performance. Don't worry. I might be able to help you.
How? And who are you?
They call me WeCopyTrade. Now let me introduce you to John and his friends. They are all professional traders. They spend years trading, investing, and researching the market.
Okay, so how can you help me?
With my help, you can now connect to John and his friends and copy all their strategies.
Oh, how will this work exactly?
Oh, it's very simple. You just begin to follow John or any trader that you trust. If that trader opens a trade, that same trade will be opened in your account. And if that trade makes a profit, yours will too.
But I want to remind you that I don't have the time and experience.
You don't need to have any experience to copy trade. You can spend your time doing your favorite activities while John and his friends are doing all the work for you. You can manage your risk and view your trading records anywhere on your laptop or mobile device.
This is amazing. How do I start?
You can start by opening an account with WeCopyTrade. WeCopyTrade is a platform that allows you to connect and copy the top successful traders. WeCopyTrade makes sure all your trading transactions are fair. WeCopyTrade will ensure that you can enjoy life and not worry about making big trading decisions yourself. If that sounds good to you, what are you waiting for? Start copy trading with WeCopyTrade now. Past performance does not guarantee future results. Trade responsibly. WeCopyTrade is a third-party platform, not a financial advice or a broker. Copy trading carries risks and your capital may be affected.
WeCopyTrade.
What is the Multi-Level Affiliate Partner Program? This is a 3-level passive commission program from WeCopyTrade. And here is an example. Jack is an affiliate partner of WeCopyTrade. Jack will look for new customers. Every time there is a direct customer, Jack will receive a 15% commission added to his account. And this is Leo. Leo is a sub-affiliate partner of Jack, level 1 partner of Jack. And this is Eric. Eric is a sub-affiliate partner of Leo as well as level 2 partner of Jack. After finding some sub-affiliate partners, Jack will receive commission from Leo and Eric. After Leo gets new customers and receives commission, Jack will also get 10% on the amount of commission Leo receives. After Eric gets new customers and receives commission, Jack will also get 1% on the amount of commission Eric receives. Thanks to the system of multi-level commission, Jack will always receive a great deal of commission every time AP subs successfully attract new customers. WeCopyTrade, the only platform that pays passive commissions at 3 levels to affiliate partners.
WeCopyTrade.
John always wanted to invest, but because he works full-time at the office, he never found enough time to learn how to do it. He missed out on investing in Amazon. He missed out on investing in Bitcoin and gold.
Because he didn't understand the market. But now, he started trading because he found WeCopyTrade.
It is a social network for traders that allows him to skip the years of learning the financial market and copy the most successful investors. He checks top profiles to see their success rates, returns, and risk assessment, and then he chooses to copy. It automatically mirrors all of their investments. So if they get a 10% return, he gains a 10% return as well. Investment news will be updated and shared on the traders community and social network so that he can keep track of all the market information.
WeCopyTrade.
At WeCopy Fintech Inc., we are proud to be one of the leading companies in the field of marketing and technology. Established in 2024, our mission is to provide breakthrough marketing and technology solutions, helping customers improve business efficiency and reach their target audience in the most effective way. Our motto is quick, economical, and efficient. We provide a wide range of services from UI/UX design, web development, mobile development to IT outsourcing. We are proud to have cooperated with hundreds of customers globally, bringing remarkable success to their projects. Let WeCopy Fintech Inc. make a difference for you. Contact us today.
WeCopyTrade.
Are you struggling with trading in the financial markets? Losing money as well as losing sleep every night because you don't have the time for research to keep yourself updated? The lack of experience and knowledge is the reason for your poor performance. Don't worry. I might be able to help you.
How? And who are you?
They call me WeCopyTrade. Now let me introduce you to John and his friends. They are all professional traders. They spend years trading, investing, and researching the market.
Okay, so how can you help me?
With my help, you can now connect to John and his friends and copy all their strategies.
Oh, how will this work exactly?
Oh, it's very simple. You just begin to follow John or any trader that you trust. If that trader opens a trade, that same trade will be opened in your account. And if that trade makes a profit, yours will too.
But I want to remind you that I don't have the time and experience.
You don't need to have any experience to copy trade. You can spend your time doing your favorite activities while John and his friends are doing all the work for you. You can manage your risk and view your trading records anywhere on your laptop or mobile device.
This is amazing. How do I start?
You can start by opening an account with WeCopyTrade. WeCopyTrade is a platform that allows you to connect and copy the top successful traders. WeCopyTrade makes sure all your trading transactions are fair. WeCopyTrade will ensure that you can enjoy life and not worry about making big trading decisions yourself. If that sounds good to you, what are you waiting for? Start copy trading with WeCopyTrade now. Past performance does not guarantee future results. Trade responsibly. WeCopyTrade is a third-party platform, not a financial advice or a broker. Copy trading carries risks and your capital may be affected.
WeCopyTrade.
What is the Multi-Level Affiliate Partner Program? This is a 3-level passive commission program from WeCopyTrade. And here is an example. Jack is an affiliate partner of WeCopyTrade. Jack will look for new customers. Every time there is a direct customer, Jack will receive a 15% commission added to his account. And this is Leo. Leo is a sub-affiliate partner of Jack, level 1 partner of Jack. And this is Eric. Eric is a sub-affiliate partner of Leo as well as level 2 partner of Jack. After finding some sub-affiliate partners, Jack will receive commission from Leo and Eric. After Leo gets new customers and receives commission, Jack will also get 10% on the amount of commission Leo receives. After Eric gets new customers and receives commission, Jack will also get 1% on the amount of commission Eric receives. Thanks to the system of multi-level commission, Jack will always receive a great deal of commission every time AP subs successfully attract new customers. WeCopyTrade, the only platform that pays passive commissions at 3 levels to affiliate partners.
WeCopyTrade.
John always wanted to invest, but because he works full-time at the office, he never found enough time to learn how to do it. He missed out on investing in Amazon. He missed out on investing in Bitcoin and gold.
Because he didn't understand the market. But now, he started trading because he found WeCopyTrade.
It is a social network for traders that allows him to skip the years of learning the financial market and copy the most successful investors. He checks top profiles to see their success rates, returns, and risk assessment, and then he chooses to copy. It automatically mirrors all of their investments. So if they get a 10% return, he gains a 10% return as well. Investment news will be updated and shared on the traders community and social network so that he can keep track of all the market information.
WeCopyTrade.
At WeCopy Fintech Inc., we are proud to be one of the leading companies in the field of marketing and technology. Established in 2024, our mission is to provide breakthrough marketing and technology solutions, helping customers improve business efficiency and reach their target audience in the most effective way. Our motto is quick, economical, and efficient. We provide a wide range of services from UI/UX design, web development, mobile development to IT outsourcing. We are proud to have cooperated with hundreds of customers globally, bringing remarkable success to their projects. Let WeCopy Fintech Inc. make a difference for you. Contact us today.
copy trade.
Are you struggling with trading in the financial markets? Losing money as well as losing sleep every night because you don't have the time for research to keep yourself updated. The lack of experience and knowledge is the reason for your poor performance. Don't worry. I might be able to help you.
How? And who are you?
They call me WeCopyTrade. Now let me introduce you to John and his friends. They are all professional traders. They spend years trading, investing, and researching the market.
Okay, so how can you help me?
With my help, you can now connect to John and his friends and copy all their strategies.
Oh, how will this work exactly?
Oh, it's very simple. You just begin to follow John or any trader that you trust. If that trader opens a trade, that same trade will be opened in your account. And if that trade makes a profit, yours will too.
But I want to remind you that I don't have the time and experience.
You don't need to have any experience to copy trade. You can spend your time doing your favorite activities while John and his friends are doing all the work for you. You can manage your risk and view your trading records anywhere on your laptop or mobile device.
This is amazing. How do I start?
You can start by opening an account with WeCopyTrade. WeCopyTrade is a platform that allows you to connect and copy the top successful traders. WeCopyTrade makes sure all your trading transactions are fair. WeCopyTrade will ensure that you can enjoy life and not worry about making big trading decisions yourself. If that sounds good to you, what are you waiting for? Start copy trading with WeCopyTrade now. Past performance does not guarantee future results. Trade responsibly. WeCopyTrade is a third-party platform, not a financial advice or a broker. Copy trading carries risks and your capital may be affected.
WeCopyTrade.
What is the Multi-Level Affiliate Partner Program? This is a 3-level passive commission program from WeCopyTrade. And here is an example. Jack is an affiliate partner of WeCopyTrade. Jack will look for new customers. Every time there is a direct customer, Jack will receive a 15% commission added to his account. And this is Leo. Leo is a sub-affiliate partner of Jack, level 1 partner of Jack. And this is Eric. Eric is a sub-affiliate partner of Leo as well as level 2 partner of Jack. After finding some sub-affiliate partners, Jack will receive commission from Leo and Eric. After Leo gets new customers and receives commission, Jack will also get 10% on the amount of commission Leo receives. After Eric gets new customers and receives commission, Jack will also get 1% on the amount of commission Eric receives. Thanks to the system of multi-level commission, Jack will always receive a great deal of commission every time AP subs successfully attract new customers. WeCopyTrade, the only platform that pays passive commissions at 3 levels to affiliate partners.
WeCopyTrade.
John always wanted to invest, but because he works full-time at the office, he never found enough time to learn how to do it. He missed out on investing in Amazon. He missed out on investing in Bitcoin and gold.
Because he didn't understand the market. But now, he started trading because he found WeCopyTrade.
It is a social network for traders that allows him to skip the years of learning the financial market and copy the most successful investors. He checks top profiles to see their success rates, returns, and risk assessment, and then he chooses to copy. It automatically mirrors all of their investments. So if they get a 10% return, he gains a 10% return as well. Investment news will be updated and shared on the traders community and social network so that he can keep track of all the market information.
WeCopyTrade.
At WeCopy Fintech Inc., we are proud to be one of the leading companies in the field of marketing and technology. Established in 2024, our mission is to provide breakthrough marketing and technology solutions, helping customers improve business efficiency and reach their target audience in the most effective way. Our motto is quick, economical, and efficient. We provide a wide range of services from UI/UX design, web development, mobile development to IT outsourcing. We are proud to have cooperated with hundreds of customers globally, bringing remarkable success to their projects. Let WeCopy FinTech Inc. make a difference for you. Contact us today.
Welcome back, everybody. So next up, we're going to, discuss a really important topic, the profit consistency rule. So this rule is, critical for ensuring long-term sustainable success in trading. As it helps measure and maintain consistency in your profits. So now, to give us a clear picture of how profit consistency works, then why it's so important, let's turn to Ralph. So Ralph, can you break down the rules out for us, and how does this calculate, and why it's important for traders to focus on their consistency, rather than just aiming for big wins?
So, of course, Alan, and the profit consistency rule is a powerful metric that helps you understand how stable your profits are over time. It's not just about making big gains on 1 or 2 good days, it's about being consistent day in and day out. So, here's how the profit consistency rule is calculated. You take your highest single day profits and divide it by the total of all your profits and losses over a given period, usually a month or a quarter. You then express that result as a percentage. So let's go through an example. Say your best day brought in about $200 in profit, but over the month, your total profits and losses add up to $410. In that case, your profit consistency ratio would be about 48.7%. This ratio shows how much your performance comes from one standout play. Ideally, you want this percentage to be lower, under 20%, because that means your profits are more evenly spread out across all your trading days. Now, why is this important? A low profit consistency ratio indicates that you are not just relying on a couple of big wins to stay profitable. Instead, you are showing that your strategy works consistently over time, even on those days when the market isn't giving you big wins. This kind of consistency is the hallmark of a successful long-term trader.
So that's a great explanation of that. So just to clarify, a lower ratio would mean that you're more likely to make steady gain rather than being overly dependent on a few good days, right?
Exactly, Adam. And when you are too reliant on just a few big wins, it often means that your strategy is risky or inconsistent. You could go through long stretches where you are not making much money or even losing it. But if your profit consistency ratio is low, it shows that your performance is smoother and that your trading is more predictable and stable over time.
So that is incredibly insightful, and it seems like a critical metric for any new traders who are serious about long-term success, right?
Exactly, and consistency is the key to sustainable profitability. Big wins are great, but if they are followed by big losses or a long period of break-even trading, it's hard to maintain momentum. With the profit consistency rule, traders can keep an eye on how reliable their strategy is over time.
Awesome. So now that we've got a solid understanding of what the profit consistency rule is, so let's dig in some practical strategies to help traders maintain a low ratio, easily under 20%. So Helen, I know that you got some great tips for us. So can you walk us through how some techniques that a trader can use to stay consistent and ensure that their ratio stays in check?
Actually, Aiden, the profit consistency ratio is a powerful indicator, but it takes carefully management to keep it low. So let's talk about the practical way traders can improve their consistency and avoid becoming too dependent on the rare big win. For the first, diversify your trades. One of the most effective strategies to keep your profit consistency ratio low is diversify your trades. This means spreading your investment across different markets, asset classes, or even trading strategies. If you only trade one market, say Forex or stock, you risk being too reliant on that market performance. By diversifying, you reduce the impact of any single loss and create more stability in your overall performance.
So, you know, that makes a lot of sense. So if I'm only trading in, let's say, the US stock market, and about we could really hit my point of consistency, huh? But by adding trades in, for example, commodities or Forex, it could balance some of that risk, right?
Exactly, Aiden. It's all about balance. When one market isn't performing well, another market might be doing better. This way, your overall performance stays smoother and you're not relying on just one or two trades to pull your through. The next one, the managed position sizing. Next up is position sizing. One of the biggest mistakes traders is over-leveraging. Take on positions that are too leveraged to their account balance. For example, if you have a $10,000 account, putting $5,000 into a single trade is risky, because if that trade goes south, you could lose a significant portion of your capital. Instead, and to keep your position size more and manageable, say no more than 1 to 2% of your account balance per trade. This reduces your risk and help ensure that losses don't overwhelm your profits.
So, you know, it's not just about picking the right trades, but also making sure that you're not putting too much of your capital at risk on any single trade, right? Smaller, more controlled trades lead to steadier results over time.
Exactly. By managing position sizing, you prevent any single trade from having too much impact in your overall performance. It's all about control and discipline. The next point, implement a clear trading plan. Another crucial element is having a well-defined trading plan. Without a plan, it's easy to caught up in the emotion of trading, whether that's the excitement of the potential win or the panic of a sudden loss. A solid plan outlines exactly when you enter a trade, you will exit, and how much risk you are willing to take. Having a rules in play keep you grounded and help ensure that your trading decisions are consistent, which in turn help keep your profit consistency ratio in check.
So that's a really good point. A lot of traders, especially new ones, probably jump into trades without a solid plan and end up making emotional decisions, right?
Absolutely, Aiden. It's so easy to get emotional in the head at the moment, but if you have a plan, it's much easier to stay disciplined and avoid impulsive trade that could hurt your performance. The next point, use stop loss orders. This brings us to the stop loss order. A stop loss is an automatic asset that you set up to close a trade if it moves against you. It helps to cap your losses on any single trade and protect your account balance. By using stop loss orders, you can avoid those catastrophic losses, and that can throw up your profit consistency.
So I like the idea of using stop loss order. It sounds like a way to take the emotion out of the decision-making process.
Exactly. It's like set up a safety net. When your stop loss in play, you don't have to worry about watching trades 24/7. If things go south, the stop loss takes you out of the trade automatically. Help you stick your plan and avoid last unexpected losses. The next point, regularly monitor and adjust. Another important strategy to regularly review your performance. Just because you set up a solid plan and strategy doesn't mean you should put anything in autopilot. It's crucial to track your trades, see what's working, and make an adjustment as needed. You might find certain market or strategies are delivering more consistent results than others. By keeping a close eye on your performance, you can track your approach and improve your consistency over time.
So it's a performing maintenance on your trading strategies, or when you're looking for ways to optimize and improve.
Oh, exactly. Just like a car needs regular tune-up, your trading plan does too. Continuous improvement is key to keep your profits in setting. For the next point, avoid emotion trading. Finally, and this is a big one, avoid emotional trading. Whether it's fear after a loss and overconfidence after a win, emotion can lead to poor decision making. If you stick your strategy and avoid chasing losses and getting overly excited after a good day, you must see more consistent results.
So that's such an important point, say, staying calm and disciplined even when the market is going crazy. But it is easier said than done though, right?
It definitely takes practice, but staying level-headed is crucial for long-term success. If you can control your emotion and stick to your plan, you will far more likely to maintain consistent profits.
So, alright trader, let's dive into another crucial aspect of effective trading, the risk consistency rule. So this rule is key to maintain both stability and long-term profitability in your trading account. So Helen, I know that you've got a great way of explaining it. Can you walk us through what the risk consistency rule is and why it's so important for traders to follow?
Sure thing, Aiden. The risk consistency rule is all about ensuring that you manage your risk in a disciplined, consistent manner. It limits the risk per trade to no more than 2% of your initial account balance. This is really important because it prevents large swings in your equity and helps mitigate the risk of significant losses due to a certain market movement or unexpected event. Let's break it down a little more. First, for the maximum risk per trade idea, you shouldn't risk more than 2% of your initial balance on any trade idea. This includes any floating losses, so you can need to factor in potential exposure. Unique trade idea definition. Multiple trades on the same asset in the same direction are considered a single trade idea. On the other hand, trades on different assets or in opposite direction are treated as separate ideas. For example, if you open a several position on gold buy, you could count as one trade idea and a combined risk must remain under 2%. But if you have a gold buy in GBP JPY style, they treat the two separate ideas if their own 2% risk limit. Follow the rules smooth out your equity curve, encourage disciplined trading, and more importantly, reduce the chance of the massive losses.
So, Graf, could you summarize the key takeaways from the risk consistency rule? What should every trader remember to keep their risk management on point?
Absolutely, Aidan. And the main points to remember about the risk consistency rule are as below. First of all, the risk per trade ideas. Stick to risking no more than 2% of your initial balance on any single trade ideas. This keeps potential losses manageable and ensures you don't risk too much on any one trade. The second one, single trade ideas. If you are opening multiple trades on the same assets and in the same direction, which is buy or sell, they count as one trade ideas, so your combined risk must stay within that 2%. The last one, separate trade ideas. The trades on different assets or in different directions are considered separate ideas. Each of these can have its own 2% risk, but be mindful to keep track of them. So why does this matter? The first one, it stabilizes your equity curve by preventing huge swings in your account balance. Next is promote discipline by encouraging traders to think more carefully about their risk. And the last one, the most important, it reduces the risk of the major losses that can really hurt your overall performance. So in short, adhering to this rule help keep your trading account safer and support long-term success.
So great, Ralph. I know that some of you might be wondering how to make sure that you actually stick to this rule. So let's shift gear and look into some practical strategies for making it easier to follow. So Helen, could you share a few tips on how a trader can stay disciplined and avoid breaking the reconsider rule?
Of course, Aiden, sticking to the reconsider rule takes some planning and discipline, but a total doable with the right strategy is laid. Here are a few key tips. The first one, define risk limit. First and foremost, clearly set your maximum risk per trade ideal to stay within the 2% limit. You can use risk management tool or calculator to help with that. Most platforms have a built-in tool that allow you to automate risk limits.
So that's a good point. Having that automation takes a lot of the pressure off, right? No need to constantly double check your platform does the healthy lifting.
Exactly. It makes it so much easier to stick to your risk limits when the platform is handle the numbers of you. The second one, the monitor position sizing. It's also important to keep track of the total risk across multiple trades on the same asset. For instance, if you open several positions on gold buy, make sure that combined risk for all total trades doesn't exceed 2%. That is a way to trader sometimes sleep. They open the multiple positions without realizing that combined they risking more than they intended.
So, okay, I think that covers it. Let's make sure that we are applying, these consistency management strategies and taking advantage of the new options available for account management. So, thanks, Ralph and Sharon, or Ralph and Helen. So, next up, we're going to enter the economic calendars of today. Can Helen and Ralph help me with this?
So the first one, the CID, which is the Bank of Canada government market speak. And the focus impact of this event is increasingly high. For the analysis, as the governor of the Bank of Canada, the tip Macklin speeches are closely monitored for insight into Canada's economic outlook and potential policy changes. His comment might address inflation, employment, and GDP growth, all of which influence the Bank of Canada interest rate decisions. Any mention of inflation control measures could signal a more hawkish approach, potentially leading to a stronger Canadian dollar. Conversely, dovish statement of focus on economic support could signal lower interest rates for longer, leading to a weaker Canadian dollar. The impact on the investor and traders. First of all, investors in Canadian stock and bonds will be alert for any indication of rate hikes, as higher rates could increase borrowing costs for Canadian companies, but also attract foreign investment due to better yield. And for traders, the currency trader will closely monitor Canadian dollar movement. If Macklin hints at further tightening, traders may buy Canadian dollar, expecting it to appreciate. If dovish language prevails, traders may sell up CID position. And the impact on economists, they will look for signals regarding Canada's economic priorities, such as the balance between inflation control and economic support, to adjust their focus accordingly. The next event is Australian dollar retail sale month over month. For the impact, is forecast as high. Since the forecast figures is 0.3% and the actual figures is 0.1%, the retail sale growth came in at 0.1% below the forecast figure, This is a sign of weak consumer spending, which may imply slower economic growth. Consumer spending is a significant component of GDP, so a consistent slowdown in retail sales could prompt the Reserve Bank of Australia to reconsider its monetary policy stance, potentially delaying rate hikes or considering economic support measures. Investors may interpret the weak retail sales data as a sign that Australian businesses, especially those in consumer sector, might face lower demands, impacting revenue and profitability. Stock prices in retail and related sectors could see this decline, and the impact on both trader economies. The AUD might weaken due to the disappointing retail sales figures, as weaker consumer spending reduces inflationary pressure, making it less likely the RBA will pursue aggressive rate hikes, and economists might revise GDP growth expectation for Australia, noting a potential slowdown if retail sales don't pick up. Weak consumer spending can often indicate broader economic challenges. And for the next event, Helen, please help me with this.
Okay. The next, the manufacturing PMI, the impact level, the high. The detail, the PMI rating of 50.1, while the value above the expansion threshold of 50 is an improvement from previous month, as well that the China manufacturing sector is growing about slowly, or rating above 50 indicated expansion, while below 50 signal contraction. This minor improvement could be seen as a sign that China's economic stimulus measures are beginning to support manufacturing activity. The investor may see this as a mostly positive sign for Chinese manufacturing stock, as it indicates stabilization within the sector. However, the low growth may not be enough to rise significant gains. The trader impact, the Chinese yuan could trend down slightly if the market view that is sign of stabilization of the China economic. However, the limited improvement may not lead to significant currency move. Economic impact, for the economic may view this is a signal that China economic stabilizing, although the modest growth suggests that further support or policy adjustment may be still needed. And the next, the non-manufacturing PMI. The non-manufacturing PMI of 50.2, while the technical expansion came in below the forecast and only showing above the contraction threshold. This suggests lower growth in Chinese service and non-manufacturing sector, which may be the impact by consumer spending or global demand dynamic. For the investor impact, data reading may lead investors to be cautious with Chinese service sector stock, and it point to limited growth. Investors might hold up on environment in sectors like tourism, hospitality, and other service industries. The impact on CNY could be limited as the data doesn't indicate a significant trend in economic momentum. For the economic impact, economic might interpret this as a sign of ongoing challenges in China's service sector, possibility signal link the need for additional stimulus if growth continues to stall.
So thank you, Rob and Helen, for covering today's economic analysis, and thank you to all of our customers who are joining us today. And as been informative, and that's you are as excited about the opportunities here at WeMasterTrade as we are. So remember to like, subscribe, and share this live stream with others who might benefit from it. And don't forget to follow us on our social media platforms for more updates, promotion, and trading tips. So stay tuned for our upcoming events, and we're looking forward to seeing you again soon. So until next time, happy trading.
WeCopyTrade.
Are you struggling with trading in the financial markets? Losing money as well as losing sleep every night because you don't have the time for research to keep yourself updated. The lack of experience and knowledge is the reason for your poor performance. Don't worry. I might be able to help you.
How? And who are you?
They call me WeCopyTrade. Now let me introduce you to John and his friends. They are all professional traders. They spend years trading, investing, and researching the market.
Okay, so how can you help me?
With my help, you can now connect to John and his friends and copy all their strategies.
Oh, how will this work exactly?
Oh, it's very simple. You just begin to follow John or any trader that you trust. If that trader opens a trade, that same trade will be opened in your account. And if that trade makes a profit, yours will too.
But I want to remind you that I don't have the time and experience.
You don't need to have any experience to copy trade. You can spend your time doing your favorite activities while John and his friends are doing all the work for you. You can manage your risk and view your trading records anywhere on your laptop or mobile device.
This is amazing. How do I start?
You can start by opening an account with WeCopyTrade. WeCopyTrade is a platform that allows you to connect and copy the top successful traders. WeCopyTrade makes sure all your trading transactions are fair. WeCopyTrade will ensure that you can enjoy life and not worry about making big trading decisions yourself. If that sounds good to you, what are you waiting for? Start copy trading with WeCopyTrade now. Past performance does not guarantee future results. Trade responsibly. WeCopyTrade is a third-party platform, not a financial advice or a broker. Copy trading carries risks and your capital may be affected.
WeCopyTrade.
What is the Multi-Level Affiliate Partner Program? This is a 3-level passive commission program from WeCopyTrade. And here is an example. Jack is an affiliate partner of WeCopyTrade. Jack will look for new customers. Every time there is a direct customer, Jack will receive a 15% commission added to his account. And this is Leo. Leo is the sub-affiliate partner of Jack, level 1 partner of Jack. And this is Eric. Eric is a sub-affiliate partner of Leo as well as level 2 partner of Jack. After finding some sub-affiliate partners, Jack will receive commission from Leo and Eric. After Leo gets new customers and receives commission, Jack will also get 10% on the amount of commission Leo receives. After Eric gets new customers and receives commission, Jack will also get 1% on the amount of commission Eric receives. Thanks to the system of multi-level commission, Jack will always receive a great deal of commission every time AP subs successfully attract new customers. WeCopyTrade, the only platform that pays passive commissions at 3 levels to affiliate partners.
WeCopyTrade.
John always wanted to invest, but because he works full